Investing is often portrayed as something complicated, risky, or reserved for people who already have money, but the reality is much simpler than that. Real wealth is not built by guessing the market, chasing trends, or making one perfect decision. It's built through consistency, discipline, and time. One of the most effective ways to apply all three is by investing daily. Daily investing turns wealth building into a habit instead of an event, and that shift alone can completely change your financial future. When most people think about investing, they think about timing. They wonder if now is a good time to buy, if the market is too high, or if a crash is coming. That mindset creates hesitation, and hesitation often leads to doing nothing at all. Daily investing removes that problem entirely. You're no longer trying to predict what the market will do tomorrow or next week. You invest automatically, regardless of what the market is doing, and over time that consistency works in your favor. This approach is known as dollar cost averaging. It simply means you invest the same amount of money on a regular schedule, whether prices are up or down. When prices are high, your money buys fewer shares. When prices are low, your money buys more shares. Over time, your average cost evens out. More importantly, this strategy removes emotion from investing, which is one of the biggest reasons people fail to build wealth. To understand why daily investing is so powerful, let's walk through a realistic and simple example. Imagine investing just $5 a day into an S&P 500 exchange-traded fund like VOO. VOO tracks the performance of the 500 largest publicly traded companies in the United States. These are businesses you already know and rely on every day, companies like Apple, Microsoft, Amazon, Google, and many others. By investing in VOO, you're not betting on one company to succeed. You're investing in the long-term growth of the US economy as a whole. $5 a day doesn't feel like much. It's less than a coffee, less than fast food, and less than many subscriptions people forget they're even paying for. But when you invest $5 every single day, it adds up faster than most people expect. Over 1 year, $5 a day equals $1,825 invested. That's money you built simply by staying consistent, without drastically changing your lifestyle. Now let's talk about what happens to that money once it's invested. Historically, the S&P 500 has averaged roughly 8 to 10% per year over the long term. This doesn't mean returns are guaranteed, and it doesn't mean every year will be positive. Some years the market goes down. Some years it goes up significantly. But over decades, patient investors who stay invested have been rewarded. If your $1,825 earns a return in that historical range, by the end of the year you could have roughly $1,900 to $2,000. That may not sound impressive, and that's actually a good thing. Investing is not supposed to feel exciting in the short term. It's supposed to feel boring, steady, and predictable. The excitement comes later, when time starts doing the heavy lifting. The real power of daily investing doesn't show up in the first year. It shows up when you combine consistency with time. In your second year, you're not just investing another $1,825. You're investing on top of money that's already growing. Your gains begin to earn gains of their own. This is compound growth, and it's the foundation of long-term wealth. As the years go on, this effect becomes more noticeable. After 5 years of investing $5 a day, you would have contributed a little over $9,000. With average market returns, that amount could grow to around $11,000 to $12,000. After 10 years, you would have invested over $18,000, which could grow to $25,000 or more. After 20 years, you would have invested $36,500, potentially growing to $80,000 or more. After 30 years, that same $5 a day could grow into well over $200,000. What makes this even more powerful is that none of this requires a high income. It doesn't require perfect timing or advanced knowledge. It simply requires starting and staying consistent. Time is the most valuable asset in investing, and daily investing allows you to take full advantage of it. Another major benefit of daily investing is how it protects you emotionally. Market downturns scare people. Headlines become negative, portfolios turn red, and many investors panic. They stop investing or sell at the worst possible time. But when you invest daily, downturns work in your favor. You're automatically buying more shares at lower prices, positioning yourself for stronger returns when the market eventually recovers. Daily investing also builds discipline. It changes how you view money. Instead of seeing investing as something you'll do when you have extra cash, it becomes a normal part of your life. You start paying yourself first. Over time, this habit strengthens your financial confidence and makes future financial decisions easier. Another important point to understand is that starting small is not a weakness. In fact, it's an advantage. Starting with $5 a day makes investing manageable and sustainable. As your income grows, as you pay off debt, or as your expenses change, you can always increase the amount. The habit is what matters most. Once the habit is built, scaling becomes easy. Many people delay investing because they believe they need to wait for the perfect moment. They wait for the market to drop, for their income to increase, or for life to feel more stable. Unfortunately, that perfect moment rarely comes. While they wait, time passes, and time is the one thing you can never get back in investing. Daily investing removes the need for perfection. You don't need to be an expert. You don't need to predict the future. You just need to start. Small, consistent actions repeated over long periods of time have always beaten big, inconsistent actions. Another important point to understand is that starting small is not a weakness. In fact, it's an advantage. Starting with $5 a day makes investing manageable and sustainable. As your income grows, as you pay off debt, or as your expenses change, you can always increase the amount. The habit is what matters most. Once the habit is built, scaling becomes easy. Many people delay investing because they believe they need to wait for the perfect moment. They wait for the market to drop, for their income to increase, or for life to feel more stable. Unfortunately, that perfect moment rarely comes. While they wait, time passes, and time is the one thing you can never get back in investing. Daily investing removes the need for perfection. You don't need to be an expert. You don't need to predict the future. You just need to start. Small, consistent actions repeated over long periods of time have always beaten big, inconsistent actions.